Hello, everybody, and welcome to another edition of the One Step Better podcast. I'm your host, Mike Schaefer, and with me again this week, I think this is like the fifth week in a row, we're setting records here, is the glorious Matt Patrick. Welcome, Matt.
I'm ready to go on vacation.
5 weeks, I'm done.
I think I did one from the beach, so it's a little different.
Yeah, that is true.
So,
but I think you're like 5 or 6 weeks in a row.
Yeah.
This is the longest stretch you've had, probably.
The A team is rolling.
Yeah. Or maybe we don't let you come on here every time because you're not part of the A team. Maybe you got kicked off.
Maybe.
We'll have to ask.
I know where the electric switch is, so
pull the plug.
That's right. What podcast?
This is the last episode.
Yeah.
Signing off for the last time.
Right. It's now the One Step Better podcast hosted by Matt Patrick. Yeah.
Go for it, man.
Yeah. No, I'm good. No, thanks, Mike. You're better at this than me.
All right. So today we're going to talk about something that I think is really fun. Cash money, homie.
Straight money.
We're going to talk about cash. We're going to talk about money, cash flow, things that businesses struggle with, things that businesses need to keep up with, things that key leaders in organizations need to be aware of.
Owners dealing with money for themselves. Owners dealing with money issues that their employees are going to have because they all do. So, yep. All those things.
This is fun.
Money.
Everybody likes to talk about money.
We don't have the rights to that song, so please don't throw us up on that.
I think you have to play like more than 15 seconds or something.
Okay, we didn't play it. I sang it, so that doesn't count.
We probably should have played it. So that's what we're going to talk about today. We're going to talk about money. Cash, which is going to be fun.
Straight cash, homie.
It's going to be fun. And so in this episode, I'm going to show you guys how to ask your boss for a raise. We're going to do some role playing in real life, right?
Okay, let's do it. I'm in. I want a raise, Mike.
I want a raise. So, but before we do that, we got to get started with some fun topics. So the question of the week is, if you could live in any sitcom, which one would it be?
So the first one that came to mind is Gilligan's Island. That sounds kind of fun.
Really?
Yeah, I like the idea of that little island, maybe be cool. Lost. Another island,
No chance. That sounds...
Plane crash. It sounds awesome. There's the whole smoke monster thing.
They don't have restaurants. It sounds like pretty rough living.
I don't know. It depends what you can make on the island, I guess.
Gilligan's, they were there for years and years and years.
Were they?
Yeah, I think that show lasted... Becky, you'll have to Google this real quick. But that show lasted I don't know, probably 5 or 6 seasons, I would think.
Yeah, 5 years on that. I'm out then.
The Harlem Globetrotters did come visit quite often, it seemed like. There's some...
The Jetsons?
Jetsons?
That's not a sitcom, though, but it's a cartoon. But
it's a sitcom. Is it not? I think if it's
only,
on TV, it's a
only
sitcom.
There's only 20 episodes ever of the Jetsons, too. Did you know that?
Really?
Yep.
I didn't know that either.
Maybe even less than that, even. I think maybe only 12. There's not that many.
Short-lived.
Yeah.
Gilligan's Island was only on for 3 years.
I could last 3 years. I'm in for Gilligan's Island.
3 years on an island.
Yeah, with those 2 hot women, sure. I'm not married. Yeah. Whew. At the time, if I'm not married at Gilligan's Island.
So edit that out.
I'm not married today. I am married today, yes.
Yes.
What about you, man?
Were like 10. The first 2 that come to mind. Office, which would...
Mike, you're in the office today.
I don't know if I would want to live in that sitcom other than being a fly on the wall, because it would just be funny. The person that I would like to meet in the sitcom I'd want to be on right now is Ted Lasso.
Oh, yeah, it's good.
Because that would just be fun.
Good show. If you haven't watched Ted Lasso, great show. You should definitely watch it. It's feel good. Not super kid appropriate, but not... it's pretty bad. Not super kid appropriate.
There's some...
not so family friendly, right?
Unless you're okay with your kid dropping F-bombs
there's a lot of F-bombs.
But not like...
So it's okay.
No.
Yeah, they're appropriate F-bombs, I guess, if you could say that. Not that you want your kid to do it, but I do like the theme song for He's Here, He's There, He's Everywhere. Yeah. Roy Kent. It's great.
It's a great show. I love that show. So it would be one of those 2 things.
Tart,
and
Jamie Tart, do.
Remember, we got 50 seconds or we have to pay royalties.
Okay, that's right. Baby Shark. I'm not paying you royalties for Baby Shark.
So, Roy Kent, Jamie Tart, 2 main characters on the show. Both get paid a lot of money.
Lots of cash.
Lots of money. So the question is, do they know what to do with their money?
No,
if they listen to the One Step Better podcast, they're going to learn some tips and tricks to manage their cash well.
Okay.
So before we get started, as part of getting started, so here's how this kind of came about. we have a notebook of topics, a variety of topics, kind of all fell under the umbrella of money. And so we're going to talk about debt. We're going to talk about investing. We're going to talk about taxes. We're going to talk about cash flow and budgeting and owner's comp for businesses and stuff like that.
And also, I think this, me and you have a little bit different philosophies in some of this stuff.
We do, yeah. We can argue
So
about it a little bit.
not argue, but just like I'm
Debate.
probably a little more of a risk taker than you.
True story.
And I also am a natural spender.
We both share that. I think that is the difference.
Yeah.
You are a little bit more
Risk
tolerant
Yes.
than I am. I'm a little bit of a scaredy cat when it comes
Yeah.
to those things. So it would.
So it'd be fun.
It's
Should be good. Should be conversation.
Here's where I want to start it though. We are an accounting firm. We work with small businesses and medium-sized businesses. And part of doing that, we are in constant conversations with business leaders and specifically owners of companies. It blows my mind how many times the conversation comes up that is centered around the idea that a business owner has no idea how to pay themselves. How do I actually get paid? How do I actually make money?
Yep.
What's your experience in consulting with business owners and helping them understand how them as the owners actually get cash at home?
First of all, you're exactly right. It's probably the number one question we get when a new business owner starts. And I will say this, as a new business owner back in 2004, I was the same way.
Had no clue.
I really had never figured that out before. I was a W-2 employee my whole life before this job, and I got a paycheck, and that's what I was used to. Oh crap, hey, I know I have this money that I've made from services now. How do I pay myself that? I had never heard the word draw before, other than like through a tax return, but I hadn't really ever felt it. It also depends on the type of entity you have, right? So are you a corporation or an S corporation? Are you a partnership? Are you sole proprietor? All those things matter. But what you're trying to figure out is how can you effectively pay yourself. Determine first how much you should be paying yourself. Are you putting taxes aside? Are you, what are the tax consequences that you personally have, the company has? Is it salary and wages? Is it a distribution of profits? Is it all those things matter? So it usually starts with what entity type you have. And from there, there's a number of strategies to get money out of the business. You have a couple different ways. It starts with if you are a corporation or an S corporation, you would pay yourself a salary, but you also can get profits from that business, and you're going to distribute those profits as a distribution of earnings to you, which is not taxable as distribution, but the profits are taxable to you if it's a flow through. We're going to get nerdy here for a little bit. On a partnership level, if you have you and another partner, just a couple ways there. So typically you would have the profits of the partnership that would be eligible to be, each owner would have to pay their respective tax on that. However, let's say one partner gets more money than the other or has different responsibilities. You'd have what's called a guaranteed payment, which is the idea that you're kind of tax each partner based on what they really receive, not just a 50-50 split or whatever their ownership equity percentages are. You also have the ability to get cash out like for non-earnings. So let's say you own the building that you're in. So maybe you want to take it out as rent expense. And that's another way to get the cash out of the business, which is not subject to self-employment tax, but wages are. And so what it starts with is understanding your entity type, understanding how you can properly get cash out of your business based on your entity type as tax effectively as possible. You always have to think through the idea of both Social Security and Medicare tax, so the self-employment tax or payroll taxes. What are the rules related to compensation of an owner? So an owner or a partner cannot be an employee of a partnership. You have to be only a partner, and you're not allowed to be a wage earner with a wage. And so knowing that entity type is usually your first hurdle to jump over.
I think there's a couple of things that you said that kind of...
I rambled on for
5
minutes.
I think that's super helpful. The reality is, as the owner of a business, you can just simply write yourself a check. However, how that check is categorized, how it's kept up with, how it's accounted for matters greatly. And there's certain things that you can categorize that check as, and there's certain things you cannot categorize that check as based
Correct.
on how you're structured and a lot of other items.
Yep.
The other thing I think that's super important that you pointed out is because I know for a lot of business owners, their mind may immediately go to, how much tax do I have to pay? And our first response is always thinking of federal income tax or state income tax.
Yep.
And we don't always think about self-employment tax.
Correct.
That's also
Every
significant.
state is different on how they treat certain things too. So we're in Tennessee, so we're not an S corp favorable state. So we typically don't follow a lot of the same other rules that other states have, with the idea that you would have a managed reasonable compensation number, which you're taxed on, and then your profits would be taxable outside of that. So it's super important for you to think through how you're getting money out, but also knowing what is going to go into the tax consequences of that. So an S corp in Tennessee is taxable, but an LLC with the same income is not. So just knowing all those different things, it's important that you work with your tax advisor and figure that out.
Yeah, no doubt. Another common question we get more on the new business side is, I did start a company. We're starting to generate some money. And if I look at my bank account at the end of the week or the end of the month, there's still a couple extra dollars there. At what point do I start to really think about bringing money home, bringing it out of the business, or compensating myself for my time? What does that look like?
It depends on your entity type. So start with that. Let's just assume either I'm a sole proprietor or a partnership at this point. Imagine both those pockets are yours. Your left pocket is your business pocket, and your right pocket is your personal pocket. You're going to pay tax on both of your pockets. It doesn't matter which pocket they're in. So moving the money from one pocket to the other doesn't cost you anything.
Yeah. That's not what's causing the taxable event.
Correct. You've already going to have tax based on the profit that the business has incurred, regardless if you take a dollar or all the money. It doesn't matter. So both pockets are yours. I would say in our world, move the money from the business pocket to your personal pocket for personal purposes, and then pay your personal expenses out of your personal pocket.
Which just helps keep up with everything. It's
Correct.
just a little bit cleaner.
Yep.
So as you're doing that, and you're bringing home money, it's always important to set some dollars aside. We always suggest in a separate account altogether that's not super easy to access for taxes. That way, when you have estimated payments due on a quarterly basis.
Yep. First year is generally the biggest surprise most new business owners have. They've never had to manage their own tax liability. The employer they worked for before usually did that. They don't realize there's a Social Security and Medicare piece of this bill they're going to get at tax time. There's no withholding they've made. So they're going to end up owing a larger chunk than normal. The idea of a tax refund, it's gone, right? There's nothing to be refunded. We have not paid anything in.
Yeah.
So I'm having to owe money at tax time. I generally have not had an estimated repayment requirement until this year. So I have not made any estimates. So maybe I didn't put my money aside for taxes. And so I got my first surprise tax bill.
And that's never fun.
It sucks. Everybody hates it.
So generally, if you're owning a business, you should be, if you're going to have a taxable income at the end of the year, you should be making quarterly payments throughout the year to help manage that from a cash flow perspective.
Correct. So I always say the first thing I do is I say, set up a savings account that's accessible, but not as easily accessible as you would want it, like in the same bank. So like I use an online bank that I use Capital One for mine, but I do a weekly drip of a percentage of my top line revenue. This is my profit first philosophy here. And so generally the target rate that I would tell people is, if you're putting 15% of gross revenue into your tax account as your jumping off point, you're in good shape from a tax standpoint. You're going to be over withheld. You're going to have too much money in that account, and that's a good thing.
Yeah.
Because you're saving for the rainy day. It's a savings account. But also, so you're paying yourself first, then you're paying your taxes, and now you don't have to worry about that unknown. But it also is getting you in the habit of spending less than what you have available so that you don't overspend and get yourself in a hole.
It's a big transition especially if you're coming from a W-2 employee perspective, where realistically, or at least theoretically, 100% of all of my tax liabilities is taken out before I even see a penny. And so at year end, I'm just filing a return and truing up. Where when you're running your own deal and you're no longer an employee, it's your responsibility to manage that. And if you have employees, it's your responsibility to manage that for your employees too, to some degree. And so getting that right is super important, because if you don't, you're going to have
super expensive.
it's going to be a very expensive lesson.
I always kind of use two rules of thumb. If we're earning less than $100,000, you can assume you're going to pay about 25% of your income to taxes, income. So if I did $100,000 net profit, I'm going to be somewhere ballpark $25,000 in tax due that year. So that's a pretty good chunk of money. If I over $100,000, I would actually assume closer to 30% because you'll start figuring you're going to max out your Social Security. You've got some other, your net investment tax. You have some other things that are going to pop up. Plus, you have to think about state and local too. So we're a state that we don't have income tax, but other states have that. So you should figure, 30% is a probably good rule of thumb on your net profit. So 100 grand of profit, 30 grand in tax. Using my other number though, 15%. So there's the difference between net profit and gross profit strictly is the difference between the idea we're only putting 15% of gross aside. And it's usually enough. And you're going to be over withheld at that level.
Absolutely. And so as you're moving that money from the left pocket to the right pocket, worrying about personal budgeting, not just if you're a business owner, but really anybody that's receiving cash, that has money in the bank or that's getting some type of steady income, it's always important to, at least what I believe is that it's always important to put that on some type of budget so that you know where your money is going before you actually start spending it. Matt, I think you would agree with this, but the reality is if we don't have a plan with our money, it's very easy just to blow it on who knows what. That thing that popped up this month that I wanted is the shiny object syndrome. And there's money in the bank, therefore I can buy it, is different than should I be buying it? Did I plan to buy this? It helps curb the childish nature in all of us to just go spend money.
I agree. So this is definitely a philosophy similar, that we don't have a difference in. Having a plan for your money is super important. Having a budget is super important. We as a business here have a budget that we set a budget for the year. And then I have a revised budget that happens throughout the course of the year. I also have sub budgets for certain groups in software and things we're doing. We may have an event budget. We may have a team budget. We definitely want to understand where our money is going at all times. You also have that, am I in the norms of where I want to be? So I'm a big believer in working from the bottom up, not from the top down. So this is, again, my profit first philosophy, which is I want to make sure that I'm making what I need to make. So I need to know what I'm anticipating to make, how much I want to pay myself, what I need to pay for taxes, what my expenses already are. That tells me what my top line has to get to in order to hit our goals. If not, I have to start cutting other expenses, and I'm going to cut from those operating expenses first. Yeah. I'm not going to cut my paycheck. I'm not going to cut my tax paycheck. I have to cut operating expenses until I can get my revenue where I want it to be.
Yeah. And as you're doing that budget, I always think about it from the standpoint of, in my sane self, let's say at the beginning of the month is when we do it. Meredith and I'll sit down and we'll, when we're not distracted by kids, we're not distracted by, Amazon is, scrolling through and figuring out what we want to buy. In our sane self, we're saying, all right, I expect to make this much money is going to be brought home this month. What is the best plan of action for where we want to be long term with this particular month's income? That helps us avoid just getting off track with, you know what, let's just go to Italy this week.
Yes, do it.
Yeah, that's a great idea, but that wasn't in the budget. And so I don't feel like budgets are restrictive. I think that they are freedom giving because it's
a plan.
It's a plan, yeah. And so now I have framework with which to operate, whereas before it's just
And in theory, let's say you do want to go to Italy. The plan is, hey, we're going to put money aside for a vacation in June. We don't even know where we're going yet, but in June, we're going to go on vacation. I'm going to put money aside for a vacation plan.
Absolutely.
Now, you're a lot different than me in that you have 2 checks a month that you're going to get, right? And I'm not that. In the very beginning, I think back to when I first started my practice, I was a budgeted W-2 employee, had a budget at home, had bills I knew I had to pay. I had everything I needed to know. But as I went self-employed, what I made became very dependent upon how we were doing as a practice.
Week to week could be very different.
Correct. I mean, I in the very beginning, I remember chasing, I had to go chase receivables down. Like we had to go hunt, like, hey, you're supposed to pay me 2 weeks ago.
Mortgage is due next week.
No, it wasn't my mortgage. It was, we have payroll due. And so I need to make payroll and I need to make sure that we have enough money to make payroll. This is a very typical small business owner mindset. And so, crap, I have to make payroll. I've got to go collect my receivables so I can make payroll. That was a rude awakening for me as far as not having a consistency in a paycheck. And that's a very common issue we run into on a small business owner standpoint. It's not abnormal, but a budget still helps you get there. So I need to save for the rainy day. So that's where Profit First comes into my world. It's okay, I've set up and I use Profit First as my budget system. It's okay, I need to make this. This is my cash. I'm putting, my profit, my personal pay is first. I pay myself a reasonable number to live on. I have a profit account, which I put as basically the savings account. Every quarter, I take half of that and I use that to pay off debt, or I use half of that and that's my extra money to put in my pocket. But it's basically creating reserves in a system to manage money. Business owners need to have a plan for what they're going to do, because they don't know when they're going to have a bad month or a pandemic's going to happen, or, luckily we had a nice savings account when we started this whole process during the pandemic. But, I'm not like every business, and every business is a lot like me, unfortunately. And so we had like clients that were scrambling to pay their bills. And so having that mindset of I have a plan for my money is where it starts.
Yeah. And there's a variety of plans out there. You can do a lot of different things. But I think that to your point, the plan part is what's important.
Correct.
That way you're not struggling to I'm going to figure it out as I go. But one of those plans that a lot of people are a part of, the plan that a lot of people have with their money, and this is where we can really start to go at each other, is paying off debt, right? So the use of debt in business, this is where we're different, and this isn't anything new to either one of us. We know this about each other.
Correct.
But the use of debt in business, the use of debt in personal life, how quickly should I pay that off? What does that look like? There's a math side, there's a risk side, an emotional side. You are very much, I want to have
good
all
debt.
the resources that I can have.
I'm okay with good
to
debt.
Make good decisions.
I'm okay with good, what I say is good debt.
Yeah.
Debt used to buy what I think are appreciating assets. I'm okay with that answer.
Yeah. In your world, you're using debt from a more, I'll say, mathematical perspective. If I can go borrow $100,000 at 3% and use it to generate 10% return, that's good math.
Yep.
I look at debt from that perspective, but also from where I'm a little bit more conservative is I don't want the emotional baggage that comes with knowing I owe somebody something.
Which is totally fair.
Right. And so if I owe Becky $100,000 and I lose my job, oh snap, I now owe Becky $100,000 and I have no income. Because I think we would both agree that for 99% of Americans, your income is your largest wealth building tool. Unless you have $1 trillion sitting in some trust fund somewhere, it's your income, your ability to make money. And when I don't have any debt right now, but when I did, I always felt like, man, you can point to it. There's 15% of my paycheck or whatever it was that I don't even get to see because it's going to pay somebody else. And that was emotionally not fun for me, which is kind of what led me to
I look at that as I took 15% of my money and invested it in something else to generate me other money.
Yeah.
So I'm okay with that investment, the cost of the investment.
Yeah. And I like the math. I don't like the risk.
That's fair.
That's where.
Which is why, probably why you're not a business owner today.
Yes.
Yeah.
There's zero doubt.
So like with this, as my business has grown, I've struggled with do you pay off house if you have the ability to? Do you pay accelerated on your house, or do you use that money and do it? And I went round and around this on my own. Does it make sense to pay down my house note, or does it make sense to use that money into the market? Does it make sense? So my bigger goal with my management of my money is the idea that I want to create multiple income streams. I don't want to be dependent on any one thing being my primary driver of revenue or of my income, but also like in this world, in my business, I'm not very diversified in that all my income is generally tied up in this business. And so when I have other income I want to do, I want to either invest in this asset as much as possible, which is what I do, or I want to have stuff that will take me into, I feel like if I'm borrowing money, it has to be good borrowing, or I'm buying it like a rental property or whatever it may be.
Yeah. And we're like, because you're not in love with that. I don't want to try to.
I love it.
Paint that picture because like, you're smart enough to know like you're not.
I don't have credit card debt.
If you make $100,000 a year, you're not going to go buy a $200,000 car.
Correct.
Like, that would be silly.
Correct.
And so
but I don't have credit card debt. We pay off our credit cards every month.
Yeah.
But I do have rental properties that I have debt on. I have my primary mortgage. I have a mortgage on my current house, and and there's times when I think it'd be nice not to have a house note. But right now, money is cheap. I have, I mean, like my interest rate's under 3. So it's like, well,
Go get one of those PPP loans and
yeah,
just take that.
I mean, that's hard for me to want to, anyway.
Yeah.
So
So we've paid off all of our debt, right? And
Yeah.
We've worked our budget to where we've paid off all of our debt, and we're holding Matt back from going to the bank and getting
Woo! more debt.
And so the next that next thing, that next hurdle, that next step up, is then to start thinking about how we're going to invest some of those funds, whether that's excess profits or personal savings, whatever that looks like. What's your overall opinion on investing?
Multiple ways of income for retirement. So I would like, in our world, I have a primary asset that I one day may either sell or right off into the sunset with is our firm. I have I believe in the market right now being pretty stable investment. So I have money in the market, and then through both tax deferred vehicles, so my retirement. And I also have real estate. So I think it's the real estate market today is booming. But also I have income producing properties. I'm not just holding them to flip them. I'm holding them with the idea that they're going to cash flow for me.
Yeah. The idea of having some rental properties is very intriguing to me.
It's another investment vehicle.
Yeah. My
Pay for it with cash.
adversity to risk or to debt kind of keeps me from going that route right now. But I find that part interesting. All of my retirement all of my investing is really done through retirement Roth.
You have a Roth 401k.
I have a Roth 401k, and we have.
First of all, we are
Roth
not
IRAs.
investment advisors, so
No.
remember that we're just lonely accountants.
Yeah.
But you have a Roth 401k.
Mm-hmm.
You
And then Roth IRAs.
You have a Roth IRAs
529 for the
that
kids.
you've been using backdoor to get into.
And that's it. I'm very vanilla, very bland.
And so right now, backdoor's still alive, right?
Mhm.
So
Yep. So
I should be doing that myself.
And that's just
probably.
simply for once your income hits certain thresholds, you can't contribute directly into Roth IRAs, but you can open a traditional IRA and then do a conversion to a Roth IRA. And same effect. It's I'll say kind of a loophole in the tax law. Same effect, but it helps you because Roth is you paying the taxes now.
$6,000 a
You
year.
pay
You can
zero
put it
taxes
into the backdoor.
on the growth. Yeah, $6,000 a year per person, so per taxpayer.
Yeah.
And so we have
All those kids, man.
Kids go into 529. I'm not starting their retirement earlier. Gotta
Come on,
pay for
man.
college. And so that's I'm not doing Bitcoin. I'm not out there.
I do
looking.
own some Bitcoin too.
Yeah, you're
But-
gonna lose your password. That's
No, I don't own I just have a brokerage account that has Bitcoin in it.
Yeah.
So I use Coinbase, but
you're gonna lose the password.
and I'm
anyway.
finally in the black. I bought it at like the all-time high, and then it went way down. But I am back. It is back up the last couple of days.
I remember
I don't know when
this.
this is live, but
We were sitting outside on a balcony
at my house
down at the beach.
Yep.
And
Thanks, Carl.
Carl.
I couldn't get the authentication to work
Yep.
that night. I may have
You
had too
should
much.
do this.
Okay.
Okay. Opens up the account. Dang, it's not going through.
I couldn't get the money to go through. It took me 2 weeks to get it figured out. By the time that happened, I lost 2 weeks of run.
Yeah.
And I bought it at the all-time
I think-
bought the all-time
I
high.
think yesterday it was like around 50K.
Yeah.
It's
Yeah.
doing well again.
Yeah.
That's a
It's
roller
up.
coaster.
Yeah.
I don't-
Honestly, I didn't put enough money in to matter. It's like I'm gambling. That's not investing.
It's just a toy.
I'm like, I own Bitcoin. I have no idea what to do with it, but I own some.
Yeah.
Yeah. So
Primary investing is in retirement funds. In your case, you have this asset. that
I
we
have
call an
this
accounting firm.
asset. I have
It's
I have
rental
retirement
properties.
funds, and then I have the real estate.
Yeah, and that's not super crazy. I don't think
No,
that's super
I'm
abnormal.
overall my spending issues are typically that so my own management of cash is that I have to force savings. So I've done a good job of setting up repetitive saving drips in multiple areas to allow me to whatever's in my checking account we can spend. So the money is never there. I don't see it. It's gone. And we do a good job of saving now because of that. Mandy is a saver by nature. Mandy is not a spender.
We don't save a single cent from month to month. I have 6 months of my expenses sit in a savings account, and I don't save any dollars from month to month. It's all retirement.
Really?
Yep, I don't put any money
So what
in
about
savings.
what do you do above and beyond your savings?
I'll have like a sinking fund where, hey, you know what?
I'm gonna
In
do
2
this.
years, I want to buy a
Yeah,
car.
gotcha.
So I'm going to save up for that. But currently, as of like right now, we don't have. There's nothing.
So
there.
we put all the things we allowed to do into retirement,
Yeah.
and then I have savings above and beyond that I put to a brokerage account, and then I have, my tax savings are dripped. I am a drip saving person, so I save up every week, and then I make a tax payment every quarter. Because I'm not a good saver, so if I don't if I had to cut a big check every quarter, I don't like doing that. But if I did it every week, it's okay.
I like spending money too much to save money, right? And so what we
I would
did,
recommend getting some easy drips, Mike. There's a lot of online tools you can use.
So what we
Just
did
saying.
is, all right, what's the number that we would feel comfortable with from a savings perspective? Let's hit that number, and then we don't have to worry about it again. And so that was kind of the approach that we took. Not everybody can do that.
I'll give you a couple names. You can set up some easy drips.
It's not that part's easy.
Our buddies over there at Duncan Williams got me set up on a nice drip. I do a drip there with them, and then I've got my tax savings drip, and then I've got that's really all I'm doing.
Yeah, investing money
it's scary.
Is good.
I want to get
Plan for the
into
long
real
term.
quick. So we've talked about our issues, and so this is something I think that business owners need to realize. Your employees have money issues. Mm-hmm. They do have money issues. It needs to be okay to talk about it. They all want to make more money. We all do. They all have baggage they brought with them to the table when you hired them related to money. Not everybody's family handles money the same way. Nobody has the same. Mike and I are sitting here with different philosophies. Mm-hmm. That doesn't mean it's wrong. It just means we're different philosophies. Now, if you have employees that are living paycheck to paycheck, which a lot of our employees do, it's something to make sure they understand why they're in that position, how they can get out of that position, how they can set up a system at any income level to get there. Now, some people bring all kinds of stuff with them. So there may be a bunch of credit card debt, or there may be a bunch of other debt or past problems. But I would recommend you having some financial literacy conversations with your team and supporting them in their financial endeavors. It's important. I love the fact that when I come in that our team has, I start looking at the people that work for us. We've had people buy houses since they worked for us. I've had people buy vehicles. There's nothing I want more than my team to all be financially secure and stable one day as they continue to grow down their careers. I want every person, every client, I want them to come in with financial goals. We want to help them reach those goals. That's our passion. I think it's important for you as owners to realize that stress that money causes impacts their ability to perform the day-to-day job.
Very much so.
And it's something you should be aware of. And it's not something you need to make sure that it's something as an owner, you're being a steward of your company, but also being a helper for your team to get to where their financial goals are important too.
I think of that just being a good leader. Mm-hmm. There's some compassion and empathy that comes with that. I love that our team, for the most part, feels very comfortable talking about money, whether that's their own salary or path to make more or whatever it may be. Now, you can be, if you're out there listening, you're an accounting firm, of course, your people are more, and that's true, but...
It is true, but it's not true.
Yeah, absolutely. It's one thing to talk about your money, Mr. Klein. It's another to talk about my money.
Correct.
And so our people they generally feel comfortable. I would say I got an email just today from a client who has employees that are paycheck to paycheck. It's all I'll say lower income earners. And the email was simply, hey, I have an employee who's going through some domestic issues right now. They cannot have their paycheck hit their bank account. We need to figure it out. Like there's and I could be reading into this, but the employee.
It could be where the spouse is stealing money. It could be
Correct.
Where they have a gambling problem. It could be where they have a drug problem and the money hits the bank account, it's going to be gone. That stuff happens.
The part that I may be reading into a little bit though is that the employee felt comfortable enough with that HR department to say, hey, I need some help. Can you help me with this? This is what going on. They felt inclined not just to shut that down, but say, let me see what I can do to make it happen. They emailed us and we could fix that for them. And that stuff matters, I think, greatly to your employees, especially in a labor market where any advantage you can find is going to be a big deal.
We had one of our restaurant clients come to us, and right now they have a huge, everybody does, right? Everybody's having a huge hiring problem, and they're paying biweekly. And their issue is that, hey, when somebody new starts with us, we have a week lag and we have a 2-week payroll cycle. So it's 3 weeks before they get their first check. That is a deal breaker for us for people who are struggling with check to check. We need to figure out a way to fix that problem.
Yeah.
And there's a lot of, thoughts there, but you shouldn't let you should be having the empathy. I understand that.
Absolutely.
I've changed jobs. I get it. When somebody starts with us, if they start the first of the month with us, their first check with us is the 22nd of the month. Mm-hmm. Well, if they haven't gotten a check in a month and now it's 3 more weeks where they got a check, there's stress in their house because of that. There's bills that have to get paid. All that stuff matters, and they bring all that stuff to work, and it's weighing on them every day, and it doesn't need to.
Yeah. Absolutely. And just the little bit of empathy that you can show in that goes a long way.
Yeah.
Not only I care, I listen, I want to know what's going on. It does. It makes a big deal. Don't be afraid to talk about financial literacy and the likes with your employees, because it does. It makes a difference. Well, Matt, that was a lot of rambling about all things cash. So now give me a raise.
Okay.
That was easy. All right. So thank you guys for listening to us.
I have to pay minimum wage, Mike, so we're going up to there. We'll figure there.
Give me my $7.25 an hour, baby.
That's right.
When's Tennessee going to make it 9?
When they make it 9, that's when you get your raise, Mike.
Yeah. I'm going to start writing my congressman.
That's right.
Thank you guys for listening to us. Really enjoy that you give us your attention for, 45 or so minutes a week. It really does mean a lot. If there's anything we can do to help you, feel free to reach out to us at onestepbetter@patrickaccounting.com. Leave us a comment. However you can reach out to us. We would be more than willing to sit down and talk. If you have some employees going through financial issues, if you are a business owner or a key leader that's going through some financial issues and you just need some help or somebody to, bend an ear, we would be glad to do that. Let us know how we can help. That is it. Thanks, everybody. Have a lovely afternoon. Talk to you next time.